How do you transfer a property to your spouse? What are the tax implications? Hi, I'm Kimberly Chapcroft, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Are you thinking of transferring property to your spouse? Are you thinking of doing a Form 17 so that you can spread the income that you're receiving on the property to help reduce your taxes as a family unit? Well, one of the nice things about transferring to your spouse is there is quite a few tax exemptions, which make it quite an attractive route to take depending what your end goals are. I would definitely recommend speaking to an accountant or a tax advisor to just chat through what you're trying to achieve before moving things around, to ensure that you're not causing yourself any other problems from potentially an inheritance tax point of view or capital gains tax point of view in the future, to ensure that it is the right decision. But if it's the right decision to transfer something to your spouse, what do you need to do and what are the implications from a tax point of view? So the first thing you'll need to do when you've made the determination that it is the right decision to transfer something to a spouse, whether that be male or female or any other derivation that there is out there today, what we need to now do is do the legals. Now that is not something I'm going to take you through because that is not my area of expertise. But speak to a solicitor and they will be able to sort all of the land registry paperwork and any documentation that you need to do. But what I can talk through is what are the capital gains tax implications, what are the inheritance tax implications, and what are the stamp duty implications. Well, let's start with our capital gains tax point of view and what happens with our capital gains tax. And this is really great news because one of the allowances we have available as married couples or civil partnerships in this country is that there is no capital gains tax payable, which means I could transfer to my spouse or they could transfer to me and there is going to be no capital gains tax payable. In essence, what is happening is your spouse or civil partner is transferring to you whatever proportion of the property, 50% of the property to you, or the whole of the property, depending what the planning points are, and they are transferring at the point that they purchase that property. So if they bought it for 100,000 and it's worth 200,000 now, they're going to transfer it to you and you are going to basically get that value of 100,000, which means when you do come to sell it, you'll both have potentially a capital gain there, because if it's 100 when it was bought and 200 now, you'll both have a capital gain of 50,000. So why might you transfer it between you? Well, one of the reasons has always generally been for the capital gains tax allowances, which at this point are only 3,000 going forward from April. If you get the transaction done before the 5th of April 2024, there is 6,000 each, so that may be 12,000 that you could get as tax-free allowances compared to 6,000 going forward. But there is still some capital gains tax allowances that can be made use of by transferring things into each other's names. You may need to just look at the cost of doing that transfer to check that it is beneficial for you to go and incur that cost to do that change. Now moving on to the inheritance tax point of view, and again, everything is transferred between spouses and there's no gain, no loss. So in essence, if you've got that 100,000 property, it would be transferred at the 100,000, whether it be in totality or a proportion of that property. And there's no inheritance tax, there's no chargeable lifetime transfer, there's no potentially exempt transfer. It just gets transferred with no impact from inheritance tax. So as you can see, this process between spouses or civil partnership is quite a straightforward one. The main point of view here is the legal side of things. The only time we have any impact from a cash point of view is going to be when we hit the stamp duty side of things. For stamp duty, if the property is owned outright and there is no mortgage or anything on it, a gift of that property or 50% of that property or whatever proportion you are transferring to that spouse or civil partner will have no stamp duty, because if you're just transferring it as a gift with no actual cash consideration, there will be no stamp duty chargeable. However, the reason that there may be something that kicks in with stamp duty is very much on the basic that if you have a mortgage on it and you are transferring part of the ownership, you are transferring part of the loan or the mortgage on that property. And the value that is on the mortgage is the value, the cash consideration that you are transferring for stamp duty purposes. So if we take a 300,000 property as an example, and on that property we have a 200,000 mortgage. And now Mr. Smith wants to transfer 50% of that property into Mrs. Smith's name. So we've got a 300,000 property that we're now transferring 150,000 of value to his wife. Now, having transferred the 150, we've got a 200,000 mortgage on the property. So in terms of cash consideration, we've actually transferred 100,000 of value to his wife and 50,000 where it has been transferred, but there's no actual cash consideration for this element of the gift. But we do have 100,000 that has been transferred as a cash consideration, which is in essence the mortgage on the property. Now this 100,000 then needs to be put against the stamp duty rates. Now because it's 100,000, then potentially this is going to be at the 0% rate, which means there's no stamp duty payable. But depending what the rates are at the time of the transaction, which now I'm talking it's probably 0%, but at some point in the future that may change, it will be whatever rate is applicable at that point that this transfer takes place, and that will then become payable. A stamp duty return will need to be completed and submitted to the stamp duty office for stamping with payment of that stamp duty. Now, even though there may be a little stamp duty to pay to do this side of things depending on the property, it may be still a beneficial route to take depending on what the goal of the transfer from one spouse to the other was aiming to achieve. If, for example, one is a higher rate taxpayer, the other is a basic rate taxpayer, and you're trying to move income across, in the long term it may be worth paying a couple of hundred, a couple of grand if you're paying lots and lots of money of tax on the rental income on that property. So do just consider this side of things and be aware there may be some stamp duty payable depending on the value that is being transferred. So in summary, moving things between spouses and civil partners is actually a great way of moving things if it's part of the right planning process that you've done to look at your capital gains tax, your inheritance tax, and your general income strategy as a family. But make sure you have a word with an accountant or a tax advisor to just ensure that this is the right approach for you and your family. And just be aware that there may be some stamp duty on, especially if you are transferring a property that has a mortgage on, which is deemed to be a cash consideration, which you will have to pay some stamp duty on. Overall, it's a great strategy if it works with your plan. So have a look into this and see if this may be the right option for you and your family.
Hopefully today you've discovered exactly what you need to be doing when you're transferring a property to your spouse and what the tax implications are. What are you going to be paying and what are you not going to be paying? If you have any questions, then please do leave a comment. Please like the video and do subscribe to the channel. And let's make tax less taxing. Let's make tax less taxing.